So, how is everyone? Hopefully, everybody is great. It's on a Tuesday, a CIP day, and really grateful for this day. Hopefully, everybody is sound and healthy. Hopefully, wherever you are, you have an amazing day, and everything is great. You're learning every day. You're getting 1% better all every day. As we keep fighting, as we keep striving and struggling, so that we get better every day and improve ourselves and in this trading venture. So on Tuesday, we are going to look at what price did and how we did interpret these prices, how we did approach the markets, and get to understand what the market did. Did we improve on something? Did we get to learn something? Or did we get to do a mistake that we had recognized before and got to repeat it? So I'm going to share whatever I've got to learn today and get to draw the lessons and get to draw the improvements wherever gotten things right for today. So remember to hit that like button and please subscribe to this channel as we get to learn every day, all day, doing whatever we love doing. Okay, so this is the 1 hour time frame, and I'm a New York trader. I only trade New York session. For those who don't understand the sessions, what I mean, we have the New York session, we have the London session, also have the Asian session, which are the major sessions that we as traders are familiar with. Okay, so I'm a New York trader. I don't trade London session, despite the fact that I'm in a region where I can trade the London session. I don't like trading it because I would like to wait for a continuation during the London, because if we had a bullish London, and we are bullish for the day, we are expecting a continuation higher during the New York session, right? So yeah, that's why I love the continuations during the New York sessions. Okay, so over here we have the daily chart. As you know from before, this is the DXY. So I do analyze the DXY, from which I do enter my trades. When prices reaches my key point on DXY, then I enter the opposite in the currencies, the Euro USD, because that's the pair I mainly trade, right? So today, as you know from before, we are bullish in the DXY over here. So we are bullish. This chart is dirty, that's why I did have another chart or another brokerage this display. So yeah, we are bullish. I want to see this buy side liquidity being tapped into and also see how price will react. So my draw on liquidity is this buy side liquidity generally for the days coming. So I'm generally bullish for DXY. So if I'm bullish, so I was to enter buys, or I will be, or I have been entering buys until I have seen price deliver to that buy side liquidity. And as you can see here, we had these highs, so I'll get rid of it. But this one I will not. This volume imbalance, I'll let it because this was the draw for today. Okay, so since I'm bullish, there's nothing I can do there, so I dropped to the 4-hour time frame. You can see my volume imbalance. It should have been below this here, yeah, but maybe I considered the 1 hour volume imbalance, though. Yeah, so above here we have buy side liquidity that is paired with an imbalance also paired with a volume imbalance. Okay, yeah, so this was my draw on liquidity, and we had CPI. And I guess you can remember, as we had talked yesterday or the previous video, I had highlighted these weekly inversion fair value gap, from which from which I was anticipating to see buys. But since we don't trade CPI, it was on a Tuesday, and we had CPI. For those who don't know how to get these news, you can go to forexfactory.com. Then you can see how the news have been outlined, or the timing of these news. So we had during 8:30 New York time, of course, we had news CPI, which we don't trade. Okay, we don't trade before the news, but afterwards we can trade. So what happened here, you can see the market, or the price, respected the weekly inversion fair value gap, whereby the CPI draw down, clear these liquidities here. Okay, I guess you can see, or created equal lows below this zone. Then we had this candle close inside, above the fair value gap, after these are closed at close proximity to the low of the weekly inversion fair value gap, but these rally lower than closed above the weekly inversion fair value gap. So we want to enter buys. And how did I get to read price for my entry? So during 8:30 we can see price was retracing lower. Yeah, this is the volume imbalance I was targeting. So from on Monday we had these drop lower. Today during London session we had this drop. Okay, so that's why, like, sometimes I don't trade, because major movements, or major movements for distribution phases. As for me, I've watched, or I have observed that they usually occur during the New York session. So we had this drop down here during the London session. We can see the bodies respecting the weekly order block, the weekly inversion fair value gap. So when I saw these bodies were respecting these, this was a confirmation, or it was some confluence that we are respecting this weekly inversion fair value gap for higher prices. And what do we see during these CPI? We had this huge drop down, then market rallied and closed higher. We can see I have this line there. This dark line is at these candles high. So my entry was based, because I have seen these candle trace, so I wanted to enter when I had seen these immediate rebalance. I wanted to see that these we have an immediate rebalance, then head higher. So inside the 15 minutes, because this is the zone I did enter my trade, what I saw is, we can see over here we had these swing high created, we rallied lower. During the news, we can see how this week formed. We had these rally lower than this CPI. So we don't usually joke with CPI. CPI is among the non-tradable news. If you are new to these things, also I'm still learning, so I make my trades afterwards. So yeah, so after I've seen these and the CPI news was done, I saw this fair value gap that was let open between inside these candles high, and also these candles low, these bull candles low. So we had these BC buy side imbalance, sell side inefficient. It's inefficient of sell sides, so it's inefficient of sell side delivery. So this candle rallied higher, then we had this drop down offering sell side, but not fully. It didn't fully close this fair value gap, which I really didn't want to see it to be filled. Okay, I wanted it to leave a breakaway gap for my confirmation or for my confluences to be like I wanted to see price higher. So once that was done, my entry, I had I'll buy a sell limit for Euro USD, because DXY we are generally buying, but in the currencies we are selling. So I put a sell limit at the zone with my stop losses at the weekly inversion fair value gap low. So it was a 1235, but obvious, as you know, partials at 1 to 2, then we leave some running. So from there, what we saw is market rallied down into this fair value gap. Then we had this rally up to our draw on liquidity, which was the volume imbalance, then from which we have seen these retracements, right? So then we have this retracement lower. Maybe we'll tap into these fair value, get this back into this zone, and then buy off. So these are how I did see price today. So if you can remember, this is the 1 hour immediately balance that I told you. At these, I want to see a candle overlap with these candles weak, ensuring we have no imbalances here. Then as after it had done so, then we had this retracement higher to our draw on liquidity, and from which I guess we benefited on Euro USD. But what I saw is we had good sales on GPP. We can see how the market is playing out on GBP. We can see it's a consolidation, like it's a slow. We are consolidating in this zone, but we can see how CPI came to take the news, and these buy side liquidities above there, these relatively equal highs, then rally lower. So as from tomorrow also, I'm anticipating lower prices. Want to see lower prices, because now above these zones we have no business, because everything is now balanced. And tomorrow also we'll be back at these trying to look for sales, right? And let's try and read some price action here, how price is acting. We can see we had this drop down clearing these sell side liquidities over here. So this sell side liquidity had been cleared. Then we saw this retracement higher, and we had this upward movement clearing these buy side liquidity. Then we had a retracement lower, creating a relatively equal lows that were our first target for today. Also, as we were watching also on the volume imbalance for the DXY. So these were the first targets where we drew our partials. Then before then, the CPI rallied higher, clearing this buy side liquidity, respecting this order block. Price closed below this order block. Okay. Also, we had this retracement higher, respecting this order block, whereby it's preventing higher prices. Then we can see this drop down. I'm anticipating to see a consolidation here before tomorrow's day. So that's how I did read my price, and how I did interpret the DXY, and how I did enter my trade on DXY, and it was a nice trade. Something else worthwhile of learning is partials are really necessary, because if you were to maybe target these highs, you can see these highs or these highs. One thing I've learned today from ICT's video on 11th yesterday on Monday 11th, is that you do not need to see price retrace to that draw on liquidity. Just take the low hanging fruit. Okay, this was the low hanging fruit, and price couldn't have retraced to this volume imbalance. Okay, so that's why it's necessary, or it was necessary for me to take my partials before price retraced to this level. If I couldn't have taken my my partials, then this could have been the market could have maybe, if I was maybe targeting these buy side liquidities over here, and maybe I don't know how, or I have not yet learned on how to take partials, then definitely I couldn't have hit my target, and maybe price could have maybe gone to break even, or maybe gone to loss if I didn't know how to manage my profits. Okay, so this is something worthwhile of learning. There's no need, or price doesn't need to go to that draw on liquidity for you to be profitable. So you take the low hanging fruits, from which you keep learning and keep refining, and I know at one point things will be all right. So until tomorrow, guys, that's how I did read my price. We're doing this all day every day, getting to understand where we went wrong. Something I'm also fading in is my journal. So from this video, I guess I'll be updating my journal, and also write something I've got to learn, because I've it seems I'm getting lazy, because I'm doing this video as a form of journaling, but I should be writing things down, right? Yeah. And also, let's get to learn all day every day. So thank you for being watching this video. Thank you for being around. Please hit that like button and subscribe to the channel. Until we talk again, be safe, man.